Everybody is wondering why Bitcoin is falling. And one of the reasons that many people have heard throughout the past few weeks is that Bitcoin OGs are selling their Bitcoin. Today, I want to unpack what's going on with long-term Bitcoin holders. Are they quietly cashing out, or is this just a normal market rotation? And is that actually a bad sign, or honestly kind of healthy? And also, wild question, what if Satoshi's coins actually moved one day, and what would that do to the Bitcoin price? And before we wrap the video, I'll also go through the biggest Bitcoin headlines of the week. I am RK, your host at the Pioneers of Bitcoin podcast. Let's get into it. Okay, everyone. So welcome to another episode here at the Pioneers of Bitcoin podcast. I thought today we would go through this question of Bitcoin OGs selling their Bitcoin, because this has been one of the most common things I heard throughout the past few weeks. And we're going to go through the data together and discuss this matter. So let me share my screen here. So as you can see on this chart, on the red lines, you see Bitcoin that has been held for more than 7 years and was sold. So we have, this chart gives a good visual. Yeah, one second, let me just read through this. Yeah, the orange line, exactly. The orange line is a 100 million OG dump. And the red line is a 500 million OG dump. So actually it doesn't matter the line color. What matters is that Bitcoiners or people who bought Bitcoin for more than 7 years have sold in record numbers this year in 2025. And the question is that actually a good thing, or is that actually a bad thing? And this is actually, or could be actually, one of the reasons why Bitcoin's price has underperformed gold and underperformed many stocks this year. And I would like to talk about one thing that a lot of people ask when they get into Bitcoin and they're quite new, which is, how can we make sure that Bitcoin gets distributed? Because I'm not sure if you guys remember WorldCoin. There was a coin that was issued by, I think it was the guy from GPT, the AI guy, who introduced this coin, and it went to nowhere, obviously. But the idea was that we will issue a new cryptocurrency and we will just distribute this currency worldwide fairly, so we have a fair share for everybody. And as you can see, it didn't work out. Otherwise, we would have something that would have overcome Bitcoin and would be more valuable, but we don't. So it went to zero against Bitcoin. And the reason, and the question is here, why does that happen? And how can we actually make sure that a new form of money like Bitcoin or any form of money can get redistributed? And what Satoshi, the founder of Bitcoin, really understood was that you cannot just convince people to use a form of money if they don't see the value. And how can you actually create value in a form of money that is new? You actually make it distribute itself by itself. And how can you make sure that happens? You build properties into the protocol that will ensure a self-fulfilling prophecy of coins being distributed over time. Now, what do I mean by that? Bitcoin didn't start with 21 million coins right at the beginning. Bitcoin has a history of blocks. If you go to this website, mempool.space, you can observe these blocks yourself. And if you scroll all the way back to block number 0, you will see the Genesis block. This is the block that came into existence 17 years ago. And on this block, we received 50 Bitcoin. And this is how new Bitcoin basically gets issued. And the person who mined it got it and could send it to anybody or pay for something with it. But that miner had to do some work in order to earn this 50 Bitcoin, which was electricity, and still today is electricity. So you have to really expand energy in order to mine one of these blocks. That's how new Bitcoin is produced. Now, every 10 minutes, we had 50 Bitcoin back then. So Bitcoin didn't come up with 21 million Bitcoin right at the beginning. It got embedded into its protocol a coin distribution rule that said every 10 minutes there's going to be 50 Bitcoin for the first 4 years. And for the second 4 years, we will have that. And for the third 4 years, we will have that. And for the fourth 4 years, we will have that again until we reach 21 million Bitcoin, and that's it. So he embedded this rule into the protocol that nobody will be able to get all of the Bitcoin right at the beginning. Unlike any other cryptocurrency that you see today, for example, Ethereum, they pre-mined 70% of the total supply of Ethereum and distribute it to a bunch of friends. And then they launched the blockchain. That's the history of Ethereum, by the way, if you didn't know. So Satoshi understood if we want to have a new form of money, which is neutral, we have to make the rules neutral, and we have to make the rules of getting these coins completely neutral. Now, if you mined one of these blocks 17 years ago, you were actually really lucky, because back then, Bitcoin had absolutely no price. So you were able to get these coins for free, almost for free, by just using your laptop and mining these coins. But most of these coins obviously got lost. Anyways, to come to my point, anybody who actually paid for his Bitcoin many years ago, let's talk about these OGs now, who bought these Bitcoins 7 years ago. They paid a price 7 years ago, and they waited for 7 years, and then they sold the coins. Just like they bought 7 years ago the coins from somebody else who might have bought it 7 years back. So ultimately, as more and more people join this network through mining or through buying the Bitcoin, because there's only two ways to get Bitcoin, right? There is one way is mining it, and the second way is buying it. And for anybody who buys the Bitcoin or mines the Bitcoin, they are free to sell it later. And the more people actually do this, the higher the Bitcoin price will go, and the more users we will have because of the price action, because of the dollar price action, because more and more people join the network. Now, if somebody sells the Bitcoin from 7 years ago, that's actually the best thing that can happen to Bitcoin as a form of money, because that's how you get new users to join and actually buy the new Bitcoin or buy the old Bitcoin at a new price. And 7 years after that, they might sell their Bitcoin to new users. You see? And this is the genius of Bitcoin. It uses people's greed to pull them into the network. And over time, people want to live, right? We have a limited amount of time on this planet, and we want to actually live. So what's the value of any form of money, including Bitcoin, if I cannot actually spend it? Okay? So anybody who bought Bitcoin 7 years ago, selling it today, is selling it to somebody who wants to buy Bitcoin with his savings because he wants to store his labor or his time or his money for his future. And on and on and on. That's how you get more and more distribution of the coins, because old holders are selling it to new holders, and new holders will sell it at some point to new holders, and so on and so forth. And everybody will buy the Bitcoin at some point in the future at the price that they see fit for them. That's why there's a saying, everybody buys Bitcoin at the price they deserve. Because most people think Bitcoin is too expensive because we are now at $91,000, but they fail to see that Bitcoin used to be very expensive at $900 and $9,000. So my point is, Bitcoin can never be too expensive because we always expand the number of dollars circling in the economy. And as long as we always expand that number and we have a secure network that has a limited supply, which is the Bitcoin network, we will always have higher prices in dollar terms. So people can actually save their money in something that holds its value over time and appreciates its purchasing power over time. And obviously, at some point, they want to spend the money on things they want in life. If somebody saved money 7 years ago and that money has 10x 7 years later and they want to buy a house, obviously, they are going to do that. So this is the most beautiful thing that can happen to the Bitcoin network. But there's a huge price for anybody who sells their Bitcoin. Imagine you would have bought Bitcoin at $1,000 and you would have invested $10,000. This would have gotten you 10 Bitcoin at a price of $1,000 per Bitcoin. Now the Bitcoin price goes to $10,000. So you multiply 10 times 10,000 and you get 100,000. So your $10,000 turned into $100,000. And you think like, oh my God, I made a fortune. Out of $10,000, I made 100,000. That's a 10x. What am I going to do with this money? I'm going to buy something I always dreamed of. I'm going to buy a car. Okay? The car is going to cost you $100,000. And you feel amazing. Now Bitcoin goes to $100,000. Well, the 10 Bitcoin that you got just turned to $1 million. So the opportunity cost that happened to you is $900,000. So you lost $900,000 by selling your Bitcoin at $10,000. If you would have held it for longer, you could have gotten $1 million out of your investment. So there is a huge cost at selling your Bitcoin at any price, even if it's at all-time high. If you think today you are the smartest guy in the universe because you sold Bitcoin at $125,000 because that's the peak right now, and Bitcoin goes to $1 million, you won't feel as smart as you feel right now. But if you say, hey, I'm in my 40s and my child needs to go to college and I want to pay for that, and you do that, there's absolutely no regret. So it actually disciplines people to think twice if they really want to spend the money that they made. That's the nature of Bitcoin. So to summarize, it's always good to have old holders selling their Bitcoin to new holders. That's how we get coins distribution. But now let's actually go back to this block 0. Okay, so if Satoshi comes back and sells all of his Bitcoin, of course, that's going to dump the price. It's going to put pressure on the price. But even that would be great because finally, his coins are also going to get distributed into new holders. Because for every seller, there's always a buyer. And if there is more sellers than buyers, obviously the price will go down. But at some point, because this asset is limited in its supply, at some point the sellers will lose steam. They will run out of coins. And that's where we always see the bottom of the market. That's where the sellers are overexhausted and Bitcoin makes a new bottom, and then we return back. That's why we have had many, many cycles where Bitcoin went to new all-time highs, crashed all the way down, and then made a comeback again. And everybody thought it's going to go to zero, and it didn't. Because there are a crowd of people who do understand the characteristics and obviously the properties of this asset class, and they hold it. No matter where the price goes, they just hold it for the long term. So this is a good thing. This is an amazing thing for Bitcoin. I'm really, really happy. And one thing I wanted to show you, which is also very interesting, that I saw a tweet just a few weeks ago that most of the losses that we have had in the past few weeks were from people who bought at higher prices. Most of the losses. Which shows that we have new buyers at higher prices and old buyers sold to the new buyers. And obviously the new buyers will be at loss. And if they sell, they will sell at a loss. But if they don't sell and just hold and Bitcoin comes back up, that is the reward that you get in Bitcoin. I myself, including many people I know, the first time you buy Bitcoin, it can dump really, really bad. And you will feel quite stupid for a while. But once the price comes back up and you actually hold to the asset, you will realize that it's actually worth holding it for the long term and not speculating on it on the short term. And next thing I wanted to show you is this news. And this is what matters, guys. This is adoption, okay? Maybe it's not adoption on an individual level, but it's adoption on a state level, on a national level. This state, Texas, which is a Bitcoin-friendly state in the US, is officially the first state to buy Bitcoin and put it in their strategic reserve. It says 10 million here, but I believe it was 5 million. And if you look at Texas, obviously it's a huge state, and $5 million is not a lot of money for them. But still, this is historic because nerd money, internet money turns into something that actually a state in the United States, this is not some random country, this is not El Salvador, right? This is Texas, this is in the US. They bought Bitcoin for their strategic reserve. This is absolutely crazy and historic. And if you just relatively look at the numbers, this state has almost 30 million people in its population. And remember, El Salvador was in big news. Hey, we have the first country who adopted Bitcoin as their legal tender. Well, El Salvador has a population of only 6.3 million. So, like this is actually a bigger deal than El Salvador if you look at the number of people who actually live in this state compared to El Salvador. And remember this guy, JP Morgan. Remember in the last episode we talked about their projection that Bitcoin will go to 170,000. And I'm on the record. You can just go back and listen to the same episode. I said, guys, something is wrong. This bank is predicting Bitcoin is going to go up, but they are trying to dump the share price of MSTR or MicroStrategy. And there was something fishy, and there is absolutely no proof that they did it, obviously, but something was fishy there. And now we know what it was. JP Morgan just filed to launch a Bitcoin-backed bond. The same bank that was curb stamping Bitcoiners last week is now trying to profit off Bitcoin. And then Simply Bitcoin comments here, incredible how fast the narrative actually changes. And it actually is indeed incredible how quickly things can change. So just a few days ago, everybody said, this is the enemy, we have to boycott JP Morgan. And now we know why they actually projected the price to go up and why they were saying things about MicroStrategy, because they want to profit off Bitcoin. And everybody's going to come around, including JP Morgan. Everybody is going to come around at some point in Bitcoin. Yes, so that's also really interesting news. And one more thing I wanted to show you guys, and I'm going to end the video for today with that, is that we have seen another heist. And this is actually quite crazy. So 11 million crypto heist, an armed robber posing as a delivery driver broke into the $4.4 million house of this guy is the ex-boyfriend of Sam Altman, and this is the ChatGPT AI, OpenAI guy, his ex-boyfriend apparently. He was tied up and tortured his housemate, and the robber then drained $11 million in ETH and BTC in 90 minutes. That's crazy. That's actually crazy. And then they continue and say, not random, but a precision, organized crime execution, a warning shot for wealthy crypto holders. This comes days after a Russian crypto couple were found dismembered in the UAE in another wallet-driven attack. Guys, this is the reason we do what we do at 21st Capital, which is the company that we are running. We help people to avoid a situation like this. That's the reason we do what we do. If you need help to do something like that, I mean, not something like that, but if you want to not fall victim for a situation like this, that somebody breaks into your house and drains your wallet, get in touch with us. Just book a demo on our website, and probably my colleagues or myself will talk to you about this issue, and we will help you step by step to do a very, very secure setup that this can never ever happen to you. If these guys had a proper multi-sig setup, this could have never happened to them. But because they didn't, they were forced to actually hand over their money to the robbers. So I'm going to end the video with that. Thank you very, very much for listening, and I'll see you guys in the next episode. See ya. Take care.